Hello, and welcome to this video module on SEC filings, the 10k annual report. We're going to take a look at how best to extract information from a 10k. First thing we're going to do is start by going to the SEC company search website, and I've included a link here. We're going to focus on a company that had a IPO in 2010, a consumer products business called Vera Bradley Designs, ticker VRA. Our goals are going to be to extract a bunch of information that we're going to use for valuation purposes at an investment bank. So the things that we would normally go to a 10K for would be revenue, EBITDA, net income, earnings per share, basically net income divided by the shares outstanding, equity market capitalization that we're going to use in our comparable companies analysis, our M&A comps analysis, but that's basically from shares outstanding multiplied by stock price, which we can grab from any sort of service. We're going to try to get total enterprise value, and basically I'm going to show you how to get information about the business, the products, the sales channels, the competitors, and more. So let's flip over to that SEC website. And you can see we're on the SEC company search. I'm going to go ahead and just type in the ticker. We could also alternatively type in the company name up here. But let's find some companies. And you can see we're in the Vera Bradley Inc. And I want to pull up the 10K. As it's a relatively new company, it just has about 2 pages of info. But just scanning, I can see the latest 10K right over here. I could also alternatively just search by filing type. And I'll just show you how to do that. Search, and we just got the one 10K. Click on the Documents button. I usually click on the top one, the Form 10K. The others tend to be exhibits and graphics. And we're in. So let us know, SEC Form 10K, company name, where it's based. I'm just going to show you how to basically flip through one of these, and I'm just scrolling down, a bunch of disclaimers up front. In the last few years, they've got these hyperlinked table of contents, very useful. You can just click and go to the section that you want to go to, and you can see I've clicked some previously. The big ones for me are going to be MD&A, Management Discussion Analysis, and the financial statements, not the selected financial data. That's kind of a shorthand summary version. The financial statements and supplementary data is the audited financials that we're going to want to use. But let's just scroll through. We can see that we've got a description of the business. Vera Bradley is a designer, producer, marketer, and retailer of accessories for women, including handbags, travel, and leisure items. Gives you a whole bunch of the history. Tells you that they have 2 reporting segments, direct and indirect, and some information on how those are sold. So 3,300 basically wholesale accounts, a website, 35 company-owned stores, 4 outlets, just a whole bunch of info on the company. When you're doing research, your senior banker may say, hey, find me a comparable on Coach, another luxury goods or handbags company, and hopefully you come across Vera Bradley, and you could then present into your firm or to clients some information about the business. So here's just a kind of a historical timeline founded through the current date. And if we go down, we've got in their version of what makes them competitively strong, how they're going to grow. All right, well, they want to expand their store base. We plan to open 14 to 16 new stores in fiscal 2012, 14 to 20 stores each of the following years. Interesting stuff. Here's some more statistics so you could see their product split. They split out handbags, accessories, travel and leisure, and other. And just to note, handbags were 54% a couple years ago, then 52, then 49. So the product base is diversifying, usually good for a company. We could see a little bit of how they develop their products, how long that process takes. They say development stage, 12 to 18 months in advance of release. Marketing, talking about catalogs and advertising and PR and social media, all just things that are good for research when you're looking up info about companies or looking for comparables within a certain segment. They've got some more info on us on the channels, what they call indirect, basically the wholesale accounts, and the direct channel, which includes e-commerce, company stores, and outlet stores. They're also going to give us some info on how they select stores, store strategy, store counts by state. Again, if you're doing something very in-depth, this is very useful information. Next, I'm going to go down to the competition. Always good to look at if you're looking for comparables for your valuations, and you can see they actually do name some. They say we directly compete with wholesale and direct sellers of branded handbags and accessories such as Coach, Nine West, Liz Claiborne, Dooney and Burke. So you, as the investment banker, would then look up, see which of those are public, and then you can go into those and add those to your comparable list, or look to see if any of those have been acquired for your M&A comps. Next, we're just going to skip way down to page 30, which is the MD&A. There's a whole bunch of disclaimers in here, information about the stock. That's the summary financials that I passed through. But MD&A is key for investment bankers, especially junior investment bankers, to read through, see if there's any unique circumstances around the financials. So you could see we're also getting some more in-depth information here. We've got revenue by segment, could be really useful. Again, if you're making a presentation to a competing company, you could just show that you've done your research, saying, well, I know Vera Bradley has blank, revenue in its direct segment versus in its indirect, and it gets 58% of its sales from indirect, down from 70% a couple years ago. So again, this company is diversifying, moving into more direct sales channels. And another great stat in this MD&A, revenue per square foot for retail stores. That is a key metric when analyzing retail companies, and various industries will have their own key metrics. For for an airline, it might be revenue per seat mile, things like that. So there are industry-specific metrics that you may want to do valuations based upon, rather than just the TEV to revenue, TEV to multiple. Sorry, TEV to revenue, TEV to EBITDA. So we've got revenue by segment, revenue per square foot. I'm just going down now a little bit more. We see in the notes of the financials something about their cash from financing activities, and I scrolled through this before, but you could see it gives us a bit of history, and we have another module on the IPO itself. But you can see the company had cash used of $41 million, driven by, well, they did a $133 million dividend to their owners before the IPO. And we talked about this in an earlier module, how especially popular in LBO transactions, common to borrow, dividend out money before an IPO and use IPO proceeds to repay some of that borrowings. And that's what this company did here. They've got a $133 million dividend. It says offset in part by IPO proceeds of $56 million, and they borrowed $36 million under a credit agreement. So they got to send their owners a big chunk of change right before they went public. Next, I'm going to scroll down to the actual audit page, which here is page 47. So you could see we could see PricewaterhouseCoopers signed, did the audit. One of the big auditing firms. So useful stats for us here would be cash right at the top of the balance sheet. So we're going to use that when we do our total enterprise calculation. Debt, and you want to make sure that you're grabbing all the debt. So we've got debt of about $67 million. I would also look up into the current liabilities, and you see there's just a tiny bit of current portion of long-term debt. Now we're going to just read more about this debt down in the notes, just to make sure it's exactly what we want. The other thing we're going to look for is we can always get a shares outstanding from a balance sheet. So bottom of the balance sheet, you can see they have a whole bunch of classes of stock. Preferred stock, but it says no shares outstanding. Common stock class A, no shares outstanding. Common stock B, no shares outstanding. And now common stock with 40,500,000 shares outstanding. Now, that's one number we could use to get a current market cap. We could just multiply that by today's stock price. Now, we're going to actually use a different number when we do the earnings per share for the year, because we're going to want to know what the weighted average number of shares out for the year was, rather than balance sheet, gives us a snapshot in time. We don't want to use the snapshot share count from the end of the year. We want a weighted average over the whole year. So just moving down to the income statement, we've got our revenue line, so $366 million of revenue, and you can just see they've had a really nice growth rate over the past 2 years. We've got our operating income of $53 million, and as we know from our studies in our previous modules, to get EBITDA, we just add D&A back to operating income. So I'm going to flip down to the cash flow statement. We've got D&A of $8.4 million. So add that in, and we get EBITDA of about $61 million. a very nice EBITDA margin, almost 20% margin on their revenues. You can see why this company was a great IPO candidate, very profitable business, high growth business. We're also going to get the net income number. Now this one is a little tricky with this company. If we were not being careful, we would say, all right, it reports net income on this line, 46 million, and we use the shares outstanding, and there's our net income. But look down below. They give us a pro forma net income, and if we look up, we could see there is something weird. The income tax expense very, very low for this company. Well, we're going to look down in a footnote 1, which we referred to see what the deal is. So you can see that they're now taking their income before taxes and applying what I would call a more normalized tax rate to it, getting a pro forma net income, and then, as I mentioned earlier, that fully diluted weighted average shares outstanding. That's the number we're going to use for the earnings per share, and they've done the calculation for us right here. But let's look down into that footnote and see what was happening with that tax rate. I'm just scrolling through, and we are looking down in the page 52, I believe. Okay, so prior to the reorganization, basically prior to their IPO, the company was an S corporation, just a different legal formation that lets a company basically pass through a lot of its income to its shareholders without getting taxed at the corporate level. So the company converted to a C Corp, which we could see as basically a normal company, what we would think of, and it had to do that at the IPO. So it's now taking, you could see it says beforehand, the company had basically no taxes at the corporate level, and now they're using kind of a more normalized 40% rate. So we want to make sure to do that. Again, that's one of the reasons you need to look through the financials and the footnotes rather than just taking what you may see on a website or what you see on first glance at looking at the company's documents. The only other 2 items I wanted to note, I want to go down and let's just read about the debt, make sure it is sort of the debt that we want to be including here. So we know that the company reported about 66 million, and we could see that the company has a credit facility, and that it says at January, basically, fiscal year end of 2011, weighted average interest rate on it. So we could use that, for example, if we're going to do our DCF, we could use that as potentially as a data point for our cost of debt. But the company had 66.75 million and borrowing availability, so it's got good availability for future borrowings under that facility. And lastly, I want to just look at the stock options in the 10K. So this company, we're actually going to, if we read through this, basically we see it actually doesn't have any options out. It did what's called restricted stock, basically grants of stock that had vesting, and we're going to see when we read through the proxy statement in a different module that a granted stock they vested on the IPO. So you can see they gave out 1 million shares that fully vested, so we don't need to worry about adding anything else when we look at calculating our equity market cap, our fully diluted shares outstanding. There's still a whole bunch of information down below. I recommend, if you haven't gone through a 10K, that you do go through this one or another one. You'll see all sorts of useful info, segment info. We're going to scroll down. There's information, bios on management, detailed information on their pay packages, director compensation, but we've basically gone through the crux of what you'd be looking for in an annual report SEC 10K filing.